Welcome, everyone. It's so good to see you all. Lots of familiar and new faces alike. And keep the chat going if you want to introduce yourself, whatever you want to use it for. This should be hopefully a fun and informative event that I'm super looking forward to as well, to learn from everyone here. So if this is our first time meeting, I'm Candace. I founded Climate Vine early last year to help accelerate the impact of climate committed professionals. So for a little bit of background on that, before we jump into the event, we've welcomed over 350 members coming from thousands of applications, and we're welcoming a new onboarding cohort this October, so pretty soon. And the membership is an opportunity for incredible folks to collaborate and accelerate each other's impact. So members get a one-on-one call to meet with me to go through goals, get hand-selected matches to other members and folks in the climate space, a mastermind with others at a similar career stage and function, and the ability to host and join member-led events on whatever like niche topics or problem areas you're focused on. So you can imagine, and these are real events, if you have a specific type of go-to-market problem that you want help from the group on, or you've just been given a grant to give away money for adaptation and you want to ask the Climate Vine hive mind to help you decide where that money goes, you can host or join any of those events. And the magic really is in having a curated group of people who are all deep in something, coming together for collective peer support, collective collaboration, and impact. So another one of our core offerings are weekly expert deep dives. And by the way, in the audience, we have members and non-members alike. So one of our core offerings, which some of you will know about and some of you are new to, are these weekly deep dives where we bring in folks outside of Climate Vine to go deep on a topic. And for this one, which again, I am like legitimately very excited to learn from everyone here. We decided to give you a small taste of what happens in Climate Vine, make this public. Actually, what I wanted to say is we have more events coming up. So if you want to join those, we'll have a link dropped in the chat. But for this one, I got ahead of myself because I'm so excited. We decided to bring in 4 geographically and topically diverse VCs to share with us their requests for startups. And so what that means is these investors will share with us, starting with the more general industries, geographies, types of solutions that are most compelling to them at this moment, to getting progressively more specific in the types of problem areas, the solutions, or even the types of companies that they're either actively looking for or would be really excited to fund. So I'm going to do short introductions on each of the investors, and then we're just going to jump into it for most of this. We have a short hour and we have a lot to go through. So our first investor that we'll introduce is Chris Dowd. He's an investor with Collab Fund. He's backing entrepreneurs and their companies that live at the intersection of for-profit and for good, including climate solutions. Next up, we have Sonam Velani. She's co-founder and managing director of Streetlife Ventures, investing in companies building at the intersection of climate and cities. We have Peter Hirsch, who is the head of sustainability at 2150, investing in companies and solutions that seek to sustainably reimagine and reshape cities and the industries that power them. So there's some overlap there in cities, but different geographies as well. And then Wale is founder and CEO of Kinjani, backing early stage African climate entrepreneurs to access capital, build, and scale. So very short intros to each of them. You'll get a sense that they're pretty diverse. And I rushed through that because I really just want to get to the request for startups. And so this is actually the order that you're going to go in. It's going to be Chris, Sonam, Peter, Caitlin. Each of you will have about 5 to 8 minutes. I might come up and ask questions and follow-ups, maybe summarize some of what you shared. And then we'll go into a rapid fire question. In the last 15 minutes, we have audience Q&A. And so if you're in the audience and you have a question to any of them or all of them together, drop it in the chat. You guys can comment or vote on each other's questions, and that gives us a sense of what questions to prioritize, because there probably will be more than we can ask live. And that's the way that this is going to work, really rapid fire and a lot of information. So we're all actually going to get off the screen. Chris, you're going to take us, you're going to kick us off, and I'll be back pretty soon.
Awesome. Candace, thank you so much. This is just such an incredible community. I'm so grateful to be here. So there are really 3 areas that are keeping me up at night, getting me excited to show up to work in the morning. And I'll talk a little bit about each of them. So one is, just to introduce, one is climate-oriented consumer brands. So Collaborative has a long history investing in supporting and frontier consumer brands, from Sweetgreen to Olipop. trying to look to identify what are some emerging consumer trends around sustainability beyond managing one's footprint, beyond electrifying the home. What is the sort of next wave of consumer brands that really resonate with a modern consumer, that are deeply sustainability oriented? The next theme, looking slightly later stage and slightly more technically deep, is what is the opportunity for AI to enable and accelerate the deployment of decarbonization CapEx? So that could be geothermal technology, that could be industrial heat pumps and HVAC, that could be on-site generation. What are the opportunities, whether it's around identifying new sites or helping those existing technologies operate more efficiently to improve the economic profile of these high CapEx alternatives? The last piece, I grew up in the American Southwest. I've lived in South America for a number of years, and kind of personally have come to see what is the implication of water quality and constraint issues. I think an added layer to that is, we're becoming more and more aware of the limitations and around PFAS regulation. I think there is a big opportunity for companies that are consumer and household oriented to take better care from a water quality perspective. Oftentimes we ask ourselves at Collab, what's something that is not necessarily true for a wide base of people today, but in 10 years, we'll imagine that everyone is aware of it and addressing it in one way or another. And I think water quality and PFAS destruction is a big theme in that area. So yeah, just to recap, next generation climate oriented consumer brands, AI enabled hardware and CapEx for decarbonization. And then the last piece is around water quality and PFAS destruction, and what is the new solution that is going to help businesses and households better address that liability, but also improve their health.
Cool. Well, I'm going to come on up. That was a short one, so now I get extra time with you, which is extra fun for me. So you talked about, let's just go in order. So you talked about consumer brands, Sweet Green, Olipop's, Olipop. Those are, I'm guessing, both food. What other types of consumer products or types of companies are really exciting to you right now?
Absolutely. I think there are some opportunities in the household hardware space, right? Maybe some folks here have heard about Gradient or other home HVAC decarbonization solutions. These are frontier technologies, but ultimately they're consumer brands, right? And so understanding what are the opportunities that are resonating with specific household profiles, I think is very exciting. Beyond that, historically Collab has invested a lot in primary materials, that innovations around nylon manufacturing, around new inputs to food products, right? To sort of innovate, be it almost like an entrepreneur within existing products by reimagining the chemistries and materials that we use. I think when I take a step back and I see, what is the opportunity for a consumer brand to speak to a next generation of folks that, maybe in my generation it was Patagonia, it was REI, for some people it was Supreme. What is the next brand that can hold a candle to that quality, right? And to do it in a very sustainability oriented, values-based way, but capture a new generation of consumers.
Cool. Okay, awesome. And it strikes me as, if you're going to build one of these climate-oriented consumer brands, especially in a hardware one, you want people on the team that are really good at hardware, but also marketing seems like the other really important skill for that team. Is that fair to say, or do you have other additions to that?
I absolutely agree with that. And I think it's not something that often comes naturally when we're talking about, these frontier climate tech companies, right? Like a new liquid desiccant startup or something that, is working on a novel chemistry for PV, or a new, whatever it might be, right? It is fundamentally a technical innovation and a breakthrough. But your end consumer is a customer. Your end consumer is a household. Your end consumer is a small business. And so if you cannot articulate and understand what comes first, is it the technology, or is it the savings, or is it the what it says about someone when they have it on their roof? I think that is sort of the dark arts of getting these products out into the world, is really understanding how do we tell the story of why now, and for who is this really for? And so you're absolutely right, Candace. Like, a marketing storytelling engine is key.
Cool. And then you talked about AI to enable decarb CapEx alternatives, which is a lot of words. So talk about geothermal, industrial heat pumps, HVAC, on-site generation. That's obviously another hardware play, but it has that AI, which can be thought of as like deep tech, but also as, software.
Totally.
Are there examples of maybe company solutions that you've seen that can do this, or just like promising, like how does AI actually enable decarb CapEx alternatives?
Absolutely. So give two examples kind of in the mining decarb space. We've heard of Cobalt Metals. Earth AI is another player in this space who is taking a historically very CapEx intensive discovery and de-risking side of the new deposits discovery and kind of de-risking phase of extracting critical minerals, and really saying, how can we do this a lot more efficiently? And so by using, state-of-the-art geospatial imaging, by using lasers and different mechanisms for capturing and, small sample on-site collection, is our way that we can build a clearer picture of what's beneath us and use machine learning, use artificial intelligence to improve our confidence around what is just beneath our feet. And so I think those are two companies where they've shown that their ability to actually participate in the economics of the mine itself by virtue of being so efficient and software forward in their sort of de-risking stage, which historically was a very manual, very difficult process for, the Rio Tintos, Antofagastas of the world. So I think that's one area that I'm excited about. What are the applications in mining space? There are others around in steelmaking, for example, where if you're looking at what are the most efficient ways to operate an arc furnace to improve the underlying economics and improve the competitiveness of this decarbonized alternative to blast furnaces, for example. So a lot of these things, we think of AI as like an enhancing tool for the economics of what may be an alternative that's understood, but isn't quite on a landed basis today competitive with the very, carbon intensive incumbent offering.
Yeah, I like that framing of, again, looking at in 10 years from now, what will be possible, not just what will everyone be aware of. So I'm going to do a very quick summary of what you shared. So climate-oriented consumer brands, you can think about the next Patagonia, right? Later stage, potentially AI to enable decarb CapEx alternatives. The two examples you gave were mining and steelmaking. And then we didn't really get to the question part of this, but water quality, knowing that PFAS is going to be something that people really care about. And you tied it back to consumer and household oriented companies. So that could be another sort of thread there, which I thought was great. So thank you, Chris. We'll bring you back up at the end for our rapid fire round and Q&A. But Sonam, we're going to invite you up to share your request for startups.
Hey everyone, can you hear me? I'm Sonam. Maybe I'll start off with just some quick background on Streetlife. So we invest at the intersection of cities and climate. The reason for that is that half of humanity lives in cities, 70% of emissions come from cities, and unfortunately both of those numbers are going up and to the right. So we often say, rather than focusing on all the doom and gloom that is climate change, right, focusing instead on agency and optimism, and how can we actually bring solutions to our streets and neighborhoods, which is frankly why all of you are here today. So to that end, we invest primarily in pre-seed and seed stage technologies at that intersection across 5 main verticals. These include buildings, energy, mobility and logistics, waste and water, and adaptation as the biggest drivers of emissions in cities, as well as the biggest drivers of climate risk in cities. The reality is that these are huge markets in and of themselves, right? And from the fiduciary responsibility of us as a fund, we have to think about how can we manage risk over the next 10 years, where the mobility market might be hot one year, the energy market might be hot another year. You and I don't know when that will be. So just being mindful of market fluctuations, and frankly, a lot of what we're seeing right now in today's market. I am deeply passionate about adaptation as a sector, as Candace knows. The reason for that is that 93% of all climate finance goes into mitigation, so removing GHG emissions. Only 7% goes into adaptation. But I often say, right, climate change is here now. We have to do something about it today, not all the way in 2050. So let's get to it. And within adaptation, I sort of think of it as sort of a three-part system. So one is understanding the risk, what is actually happening on the ground, and potential software solutions help you understand that risk, for example. One of our portfolio companies is the company called Rhizome. They basically help utilities understand their climate risk and optimize their infrastructure investments to address that climate risk. And they create both a sort of financial ROI as well as a social ROI. So if you're Con Ed or PG&E or any of these large utilities and you have, you're expecting energy demand to increase threefold, but your systems themselves are at risk, trying to think about which lines should you put underground to protect against wildfire risk, which substations should you fortify against flood risk, and where should you geographically do this, right? Not just looking at the climate risk, but also the demographic areas of the local population. You all know that Justice 40 is a big theme right now, right? So 40% of all investments from the federal government through the IRA and the infrastructure bill will be deployed in underserved communities. So the utilities could actually take this data and go to the federal government and say, hey, I am fixing my infrastructure in lower income areas, and they're actually able to get either lower cost of financing or grant dollars to be able to make those investments, which again, I think it behooves us to actually address the climate equity issues in this space, right? Particularly as this industry just gets off the ground, right? We're in the first bat of the first inning of a very long baseball game, and we have to make sure that we're not repeating the same mistakes we've made with sort of the broader tech industry and other industries in terms of how these technologies are ultimately deployed and which communities they serve. The second piece of the adaptation sort of thesis is around what are the actual hardware technologies, right? So once you understand where that risk is, you then have to do something about it. And the reality is that you've got to do something about it, often with physical interventions. So there we're often looking at technologies that have co-benefits, right? That can reduce the that can reduce sort of GHG emissions as well as help industries adapt, right? A favorite company of mine in this space is Olokun Minerals. They basically work with desalination plants to harvest all the, to sort of take all the leftover salt from the brining process, harvest minerals from that process, and then sell those minerals, right? And those minerals can be used for batteries, for fertilizer, for concrete, for all sorts of things that, ultimately, like, we need to get out of the ground. So why not just do so through the desalination process itself? And water, as you all know, is, half of humanity already lives in water scarce areas. So desalination will be one of many tools to actually address that frankly adaptation challenge. I will emphasize here, and we can get into this discussion later, that not all hardware solutions are venture backable solutions, right? So we often think about the capital stack and what type of financial product is most relevant for the particular part of the business, right? So particularly if you're doing hardware businesses, thinking about using your equity or your venture dollars for go-to-market, sales, commercialization, and then using non-dilutive capital, right? So often debt, grants, etc., for the development of your technology and sort of lowering your weighted average cost of capital ultimately. And then the third piece around adaptation that we look at is, we're going to have to deal with the here and now, right? And the state of play until these, until frankly, we understand the risk and do something about the risk. And, the world unfortunately does not move very quickly on this front. So how can we actually invest in solutions in the interim, right? And this can include everything from parametric risk insurance, disaster response mechanisms, right? Anything that we can do to sort of provide a safety net for the communities that are most at risk, and again, bridge the gap between the public and private sectors to do so. So I'll stop there. Happy to talk about all the other sectors as well, but thought we would start with adaptation, just given the significant need.
Awesome. To clarify, do you only invest in adaptation, or is that you wanted to focus on that for this?
No, we invest in 5 sectors. We
Right.
very much so believe in reducing emissions.
No, and
adaptation, but
it would be totally okay if you said we only care about adaptation because no one else, only 70% of investments are going there. And I know that you've been passionate about this for years, obviously. So I'm going to do a very quick summary of what you said, and I'm glad you focused there because again, I think part of why I brought this particular group together is because you are thinking about things that not everyone in the climate tech space or in the investment space is really thinking about. So I wanted to highlight a lot of what you're sharing. So you talked about risk, and that's often software solutions, right? And you also talked about justice forwarding, climate equity as part of obviously adaptation generally, but in this category of risk that can be part of it as well. Talked about hardware, thinking about co-benefits again, climate equity. You went down the very long topic, the very, very not long, the very important and also totally deep topic of the capital stack, right? And how hardware can be harder to be venture backable, just given what has to happen after that in terms of being able to grow it and actually finance it. The last thing you talked about was things are going to happen and we need a safety net. So parametric risk insurance, disaster response mechanisms. And then you talked about public and private solutions. We have 10 seconds. So do you have an example of that, like investing in the interim, the public, private, anything that's worked well, and just a quick shot, if it's a company, if it's an example or a space that you're interested in there?
Yeah, I think this is the hardest, right? Because for, I actually have a background in policy, right? And my co-founder Laura used to run City Bike. She also, interfaced a lot with the public sector. So maybe that's a good example, right? City Bike is a mobility solution, it's a bike system, right?
Yeah. We might have to end there unless you have a very quick comment.
Yeah, I will just say that every single technology that we all are building is regulated. So there will always be some sort of public-private interaction, and happy to get into the details on that, but don't forget that interplay as you're building these solutions.
Cool. I love that note. Excellent. Peter, we'll bring you up. Cool. You got the floor.
Hey, so I'm Peter. I'm head of sustainability at 2150. So I'm really happy that we're partnered on this panel with Streetlife because we have a very similar mission across our different funds. So just like Streetlife, we're focused on urban sustainability as a fund. When we look at where emissions come from, where climate risk is going to be manifested, where the majority of the economy is housed, where the majority of people are going to be, basically the world is urbanized. It's going to be urbanizing even more to 2050. So if we're going to be able to solve the climate crisis, if we're going to be able to start to think about how we're meaningfully addressing environmental concerns, it's really going to be an urban challenge. So within the fund, we think about what are then those tools, technologies, solutions, and companies that are going to be able to see through the transition in buildings, in energy, in transport, in industry, even in things like biodiversity and ultimately the materials that go into our own cities. And I'm really appreciative that Sonam, you mentioned adaptation, because that was immediately the thing that when Candace initially reached out to me, I was going to cover. But adaptation, while is absolutely critical and is underfunded, and is something that we certainly focus on as a fund, I'll leave that to you to cover that. And there's going to be some other parts of the urban fabric that I want to talk about. So I think what's been really interesting and I think potentially productive that we're continuing to explore is this intersection between buildings, energy consumption, and then energy distribution and transmission. Ultimately, it's like what energy are we consuming, why are we consuming it, and how are we getting it there? And this is less from a supply standpoint. So this is less from renewable energies or even large power plants, and more about what is happening at the building level, and then how are we moving our energy from supply ultimately to where demand is. And so there's a few examples where if you start thinking about it at a system level, you can start seeing a lot of revenue and exciting business opportunities that might not be totally obvious if you're just looking at it at purely the solution level. So to be more specific, at buildings, we've seen a couple of our companies and then others that we've seen in the pipeline be able to show that through their energy efficiency benefits in buildings, through things like improved insulation, or improved windows, and like reduced amount of cooling demand, which I'd like to get to in a second, you are actually getting direct incentives from the utilities, and they're actually paying you quite a large subsidy because you're providing some type of demand side management. So this is not a public subsidy, this is purely coming from private actors. So the economics of these tools work out that because the suppliers of energy, the utilities, don't have to produce more, they don't have to buy more fuel, they're willing to spend money to have your solutions installed into the built environment. And so I think if we can start thinking about ways to start leveraging energy efficiency, if 1 kilowatt hour of energy that you're not using at the final energy standpoint, so in our homes, is going to save anywhere from like 1.3 to 1.5, if even not more, when you think about the loss in distribution that's coming from the inefficiencies of combustion. So you're saving a lot of energy between primary and final if you focus on the energy efficiency within buildings. The second part that we're looking at within that is then actually the grid. So one step up. How are there going to be tools that are going to be able to support this distribution and transmission, particularly on the interplay of both of them, that is aware that there's going to be more distributed energy throughout the system, and there's going to be the need to actually have the option to feed energy back into the grid from things like rooftop solar and batteries placed within buildings. There's a number of AI softwares that we've seen, and there's a lot of tools that are coming out. We have not invested in that space yet, but given if we leave the grid at its current efficiency right now, you'd have a literally double the size of the grid by about 2050. That's the build out that we need. So we need to be able to think about this from an efficiency standpoint from software, and obviously there's going to be a hardware component, but we don't necessarily have the time and build out ready to be able to take on that level of capacity when it comes to be handling that amount of electricity. I mean, the last thing I'm going to mention is on the cooling space. So when we were dealing with a warming world, and this is sort of getting into adaptation, cooling is going to be coming online at a rate we've never seen before. Some of the statistics from the IEA look at even in the most efficient scenarios, the amount of energy demand coming from cooling is going to double between now and 2050. So we need to be ready to think about how are we going to meet that demand and what are the types of technologies that are coming online. Christy mentioned liquid desiccants at one point. There's definitely a company that we've invested in that's providing that sort of solution. But we have been dealing with the same technology on air conditioners since pretty much like the past 50, 80 years. It's the same thing that we've been doing through these compressors and pumps, and we need to find new ways of creating more efficiencies within that process to be able to ultimately provide cooling where it's going to be deeply necessary in the hottest parts of the world, but not blow up energy demand to the point where we're not necessarily going to be able to provide for it. So it's one area that, even though we've made one investment in it so far in a company called Blue Frontier, we will continue to explore the options to solve what we see as a really, really major crisis for the majority of the world.
Okay, awesome, Peter. And I put you and Sonam back to back because I figured that you all would add on to each other, which I love. Okay, so you talked about we're urbanizing a ton up to 2050. We guys invest in a lot of different spaces. Adaptation left to Sonam, but we can always go into that if it makes sense. What you focus on here was the intersection between buildings, energy consumption, and then distribution. So how does it actually get there? And so you brought up, I'm trying to figure out what to ask in the 2 minutes that I have live, but you brought up something really interesting about how utilities are paying companies that are helping with building efficiency because it's actually, it's like a private subsidy. How does that actually work, and why, how does that work? And what's their incentive for that?
So we have a couple of companies that are doing this. Essentially, that once you understand you're going to be installing your system into, these are generally large scale buildings. These are like multi-family apartment buildings or large commercial buildings. This isn't really necessarily at the scale of an individual residential installation. But since you are really knocking off large chunks of energy demand, if you're going after these larger buildings, you get an incentive as you sort of put that contract in with these building operators and managers to say, okay, like now that it's like basically ensure that you're going to be using your product there, that the sales going through, we're going to be providing you a certain percentage subsidy per unit that you're installing. And we've seen that those financial incentives, or even in the United States, for example, more lucrative than what the IRA is providing. It's just the cost for these utilities of trying to get one more kilowatt hour of electricity into the grid is so much more than just trying to pay for someone to be more efficient down the line.
That's really fascinating. And I think that relates to some of the other things that you said that I will briefly summarize, which is we've got the grid and we're going to have to double it. But you very smartly said hardware is really important, but software is also this really big opportunity to think about how do we, double it without needing to double the infrastructure. And then the last one around cooling, you mentioned air conditioners. My 2-second question is that also refrigerants in that category, or is it just air conditioners within cooling?
We would explore refrigerants in different ways of doing that. Going back to Sonam's point of everything being heavily regulated, that's one area where actually regulation might dictate what is being used more than innovation. So if there is something that comes up that will be able to fit within the EU or US's different respective frameworks on refrigerants for air conditioners, that would be great. But I think it is maybe public that's leading that market more than private innovation right now.
Cool. Excellent. Thank you, Peter. We'll bring you back up again for the rapid fire round, but Caitlin, we're going to give you the floor for a few minutes.
Amazing. Thank you so much. And Candice, really, really cool to see the community you've built in a year. Well done, and great to be part of it. Hi, everyone. I'm Caitlin, the founder of Kinjani, which is a talent accelerator out of South Africa, which is helping predominantly technical founders meet commercial and operational co-founders to build climate companies, specifically in the areas of climate resilience, circular economy, and having a carbon, biodiversity, and water impact. Why? I've spent the last 10 years in London investing in deep tech and carbon removal technologies and seeing so many of the innovations coming from the US, UK, and Europe. And just looking back home in South Africa and beyond across sub-Saharan Africa, where we have so many minerals, soils, biomass, productive oceans, and also really great science, but just really not the ecosystem to spin out a lot of these deep science solutions. So we like to describe ourselves as like an entrepreneur meets deep science ventures, but our founders are calling us more of a Love Island meets Shark Tank, and suggesting that we get a Netflix documentary series. But yeah, we specifically are looking within the industries that need to grow on the continent. So food systems, urbanization. Just in Africa, there's going to be 2.5 billion people by 2050. And that means that we're going to need 11 Singapore's size cities that don't exist today. That's a lot of materials. So we're also looking at materials, minerals. We're going to need at least 5 times more mining if we're going to hit net zero. And we've got 40% of the critical minerals on the continent. And a lot of the miners who are willing to look at things like phyto mining. We've been doing hackathons looking at how we can make carbon negative building materials using mine tailings. Water, we actually had, Chris, you were talking about PFAS. We had Pure Affinity come and give a lecture. They're a really, really cool company using material innovation to filter out PFAS from fire hydrants and now a whole lot of other industries. And then oceans as well, both from a shipping, but then ocean sinks perspective. So we're a program which are bringing together these co-founders within these specific themes. And I think we've got a couple of the founders on the call. But yeah, we're super excited to be here and see a lot of potential to link up with how these other funds are looking at the space. We're at the very, very early stage. And when these founders come through the program, they'll be at the pre-seed stage. Back over to you, Candice.
Amazing. I love getting extra time to ask you questions. So I'm going to drop in here because I don't know that you did your request for funders or for founders, which I thought was fantastic. And I was like, what do you want to share? And you're like, well, here's a link. So we already have thought about it and organized it really well. And I was like, great, Caitlin, that is why I invited you, or one of the reasons. So, so Love Island meets Shark Tank. I'm just going to leave that there because I think that's so funny and brilliant. I think that should be on your website. 11 Singapore-sized cities that don't exist right now. And so what you're saying is that, and actually urbanization has been such a theme of this call that I could sort of, I guess, predict, but not as much on your side either, or as well. It does make sense, I guess. I did live in Singapore at one point, and it's small but mighty, and it's a, it's like nation state, but it's actually a pretty big city. So 11 Singapore-sized cities is a great visual. Let's start there. And so you talk about materials, mining, water, like all of these things are actually, to make sense, deep science solutions. It's very physical. What would you say, sorry, maybe a hard question, but what would you say is like a lever point or the biggest sticking point to be able to get to those 11 Singapore-sized cities from like a materials or from like a hardware physical perspective?
Yeah, a lot of it's, I mean, the question is, how do you scale these innovations? And a lot of the solutions, sorry, I got a frog. A lot of these solutions won't be necessarily the most complex, but how do you interface with huge construction companies where you're saying, hey, can we integrate biochar below your road? Which would, by the way, also increase the climate resilience because the root structures are now being able to keep intact and you can remove carbon at the same time and predict or prevent flood impact in these areas that are getting more impermeable surfaces. But how that can tie in with existing ways for laying roads or regulations, which we know in the concrete space, even if you're just wanting to prove that you can incorporate biochar into concrete, all the literature is there to show it works, but just the process is going to take 3 to 10 years to prove it out. So from a practicalities point of view, is working with the corporates and working with where the regulators are thinking about evolving this. But we are seeing actually an openness to innovate. So I mentioned, I don't know if I did mention, Anglo American did a hackathon with our founders, and they're like, how could we use plants to rehabilitate, but also mine more or potentially sequester carbon? And so we've got some innovators in this call who are looking at carbon negative mines. And it's really cool to see that openness from a big corporation perspective, but also how innovators who can move more in a more agile way, playing a role in that decarbonization journey.
Yeah, I think that's such a good example of like, sure, the innovations, like the technical innovations actually aren't that hard. It's the manufacturing, they're not easy, but they're not the most complex. It's the manufacturing innovation, the actual relationships between corporations, policy, regulation, right? Like it's this sort of bigger system that goes beyond just the tech. So you also talked about mining and how to scale up mining, I'm guessing ethically, right? Because that's always been, or not always, but that's definitely been more of a thing that's come up. And then also the circular economy around mining. So what can you do with the waste from mining? Water, material innovation, oceans, fire hydrants, for all the things that you said. Do you want to, in like a minute, talk about any of the ethical side of mining and how that relates to some of this?
Yeah, it's super, actually something we've been speaking a lot about today. In particular, so in certain parts, for instance, South Africa's actually got one of the dirtiest grids in the world, a lot of coal that is currently being decommissioned in coal power plants, which are situated right next to some of the most biodiverse regions in the world, like top 3 in the world. And we've got this industrial hub that's completely turning into ghost towns because they're being shut down. So many job losses happening, but huge amounts of biodiversity as well. And so something that we're looking at with innovators is also water scarce regions. How could you scale teaching how to grow in hydroponic systems for phytoremediation? So if you've got the willingness from the mine and they've got the budget to rehabilitate, could you do it in a way that's upskilling the surrounding communities and with folk who have the context of what's needed and the training? So that's not going to necessarily be a deep tech solution, but it has the potential to really scale workforce empowerment and integrating biodiversity that does naturally exist there. And as we know, there are different layers of revenue streams that you can get, which might include the likes of from the biodiversity or carbon space.
Yeah, and I think you touched on just transition a bit there as well with the workforce piece, which I think is a huge piece. So we're going to invite everyone back up. We're going to do a very rapid fire. And this is the last chance, or not, well, probably the last chance to actually ask a question in the Zoom chat. Kaylee's looking out for questions. If you particularly like one, you can comment on it or do an upvote. We'll bring you up to ask those questions after as well. But yeah, please drop questions because you'll actually be able to ask it live. So my rapid fire question, and I'll popcorn it. is what is the biggest mistake that you see founders make when they, and it can be when they're fundraising, it can be when they're building, it can be any part of it, but what's the biggest mistake that you see? So we're just going to go backwards. Caitlin, why don't you start us off? And it really is rapid fire. So 30 to 60 seconds.
In the beginning phases, trying to focus on too many things within the value chain, as opposed to picking the one thing that you want to innovate and die on a hill for. I think that's something that we keep on saying, come back to the one thing.
Great example of keeping it short and quick. So diffuse focus, instead focus on one thing and focus on like that first step, right? Niche problem, and then grow from there. Excellent, Peter.
Yeah, so for context, I lead the sustainability work on the fund, which means I'm looking at the actual sort of technical due diligence of these companies. And so my work focuses a lot on how well does the product actually deliver on what it says it's going to do. Like, does it save the energy it's setting out to do? Does it reduce emissions? Does it save materials? And given that that's sort of the focus of the fund, I think that's one thing that we'd really hope companies to be able to come to the table with from an early stage, that if you are creating value out of being a climate solution, being very able to easily articulate how that value is being created from a more scientific or technical standpoint, even from an early stage, to be able to give investors some assurance that basically the science and the engineering of what you're saying checks out.
Awesome. And I love that because it's, there's often been I hear a lot of like, well, if you're a scientist or it's a tech thing, you have to get really good at explaining it to a 5-year-old because investors sometimes don't have the ability to understand those things. And what you're saying is, sure, you need a communication piece, right? We're not going to fight that, but you actually need tech that works. And you're going to talk to investors that have people like you that will actually double check it and make sure that what you're saying is true. So I like that you played that other side of it and that you can actually do that. And I think that also relates to like being able to measure your impact as a company.
Exactly.
So go for it.
Sorry, my computer is a little bit on the fritz because I have too many tabs open because we are getting ready for climate week. So if I'm a little bit off, bear with me. Don't come to venture investors with 3 pages on a deck, right? And an idea. There are tons and tons of non-dilutive incubators and accelerators that actually help you get that idea from something or something lab into a much more feasible product and an MVP. And that is actually when you start raising money. Don't dilute yourself so early. There's tons and tons of free money out there. Take advantage of all of the resources, frankly, that are unique to climate in terms of the grants and non-dilutive capital in this space. So I will leave it at that.
Awesome. Yeah. Whereas in maybe AI, you can have a pitch deck and a really smart person. Here, you need
not... You can also have a pitch deck and a really smart person, right?
But it's not as smart, maybe, because there's so much free money in this.
I think it behooves the founders, right? Because the more venture you take on, you're going to dilute yourselves, right? It's just not good unit economics for you. So just think about that as you're building and as you're trying to get your product to market.
Yeah, that was a better reframe. Thank you for that. Chris, what is your biggest, the biggest mistake that you see new companies make?
I would say the easiest one to avoid, which is, in my opinion, an own goal, is when you announce how much you're planning to fundraise to the world before you've kicked that off. And that can be in the form of a newsletter or anything of that sort. Because the reality is you don't know how much you're going to raise, and you don't know exactly what the market is going to respond to what you have. So I think being discreet about that target until you have a good sense of the direction is really important, because what you don't want to end up happening is that you send out a newsletter or a post that says, well, we're planning to raise 10 million, but realistically you're only going to go out to raise 5, or in the upside case, you can go out and raise more. So I think just it's a byproduct of being very strategic about your timing and the information you release about where you are in your process.
Very smart. We never know what's going to happen, and we might as well keep some of those things close to our chest. Excellent. So Adam, you have the first question. We'll bring you up.
My was first. So especially in relation to global warming, I was wondering how, if there's like a trend right now, or if it's just like a general thing of how VC is measured for GHG, total addressable GHG for each project, and how that is weighted per all the other factors for each venture project.
Anyone can start off. You can just go off mute.
I'm happy to, I imagine everyone has their own way of measuring this. I'll talk on behalf now of Counteract, which was the previous fund that I was at, which was specifically carbon removal. And regardless of which sector it was, if it was in the food space, it was looking at cumulative potential to remove carbon into soil by 2050. But it would need to have all the other factors checked, like self-sustaining business models. But then if it was direct air capture, it would be the same metric, but what you would be needing to measure would be, for instance, the amount of capex that needs to get there, and do you think the market could get there? But 0.5 gigaton, and I know Breakthrough Energy and Low Carbon, they look at, I think, a gigaton per year by 2050, but both avoided and removed. So it depends on the fund you're speaking to. I'd love to hear some of the others. Maybe Pisa, you next.
Yeah, so I think we're a part of this group called Project Frame that is helping to develop the methodologies to measure either what they call the planned or the potential impact of investments. And so I think part of your question is probably aware that there's not really a set method for how we do this. There needs to be a little bit more standardization across the industry. So Project Frame has come out with a number of recommendations on this front. Personally, we build what's called sort of planned impact assumptions, where a company, the same way that they would come to us and say that you could be so large by a certain date, and that's sort of where we're making the basis of our investment, we translate the growth of that company and its ultimate revenue projections into what we think their overall impact could be, whether it's CO2 or another environmental metric. So using that model that we develop over the course of an investment period, we get an idea of how impactful a solution might be. We don't have a threshold for whether it needs to be above a certain amount for us to invest. I think it's more, we use that to give conviction that this is really a robust opportunity for us to pursue, and that they'd be able to have sort of a meaningful outcome, even if they get to different exit potentials that we've modeled out.
Thank you, Peter. Sonam and Chris, feel free to drop in some quick hits if you have anything to add.
No, I think those are great frameworks. So the other thing that we really focus on is assuming these companies are working within incumbent industries, whether it's steel making, could be critical minerals. What is the opportunity for net emissions displacement across the entire sector, and how much can this company accelerate the total reduction of emissions at an industrial scale with their solution? And so a lot of times, that's something you have to imagine. What does this company look like as a competitive player in the space, and not necessarily today or in the short term?
Cool. Thank you, Adam. Ayan, we have.
Yeah, I'll just add, we're also.
Go for it.
I was just gonna say, we're also part of Project Frame, and I think like climate impact, of course, is incredibly important for all of us and why we started our funds. But the reality is that people don't buy things because it's green. People buy things because it saves costs, it saves time, it saves energy, right? So positioning your product in that way, right, is incredibly important. Because unless you as a company are not wildly profitable, you're not going to be able to have the climate impact that we are all seeking, and why you are actually building your company, right? So just keeping that in mind, again, in sort of especially the earliest days of product development.
Yeah, Ayan's question actually I think relates a bit to that in terms of the capital stack. I'm going to ask Vishant's question for you, Vishant, sorry. But how do you measure and verify adaptation benefits of investments? Is it value of statistical life, public health savings, some combination of that? Just a really quick hit on that. Or if there's a framework, again, kind of like Project Frame, that helps with that, that would be great. But really quick on this.
I would love if anybody wants to get together and actually create a framework, particularly for early stage companies in measuring adaptation, investments and solutions. A handful of us are sort of ideating around this, right? Tailwind, I know I've talked to Peter's colleagues about this as well. And venture ESG, but we look at savings. Yeah, so it's exactly what Vishal said.
Awesome. Excellent. Ayan, if you want to come on up and we'll have you ask your question live.
Yeah, I think this is something we're hearing a lot more about now, that the sort of usage of venture capital may not be the most suitable thing for a lot of hardware founders. And so I'm just wondering, I think given that VC is such a dominant sort of scaling model that we've seen so far, how can founders start to determine whether VC funding is something they're suitable for, and how should they evaluate those alternatives like blended finance, tax transfers, strategic corporate offtakes? In my sense, it feels like VC gears towards more capital-light things, but obviously climate VCs understand kind of the nuance of scaling hardware. So just kind of wanted to get a sense of if you are building in the hardware space, when should you start making that decision?
Happy to kick off. I think it's a great question. I think one should always think about taking on venture capital as the beginning of a shot clock. The reality is that most venture funds are structured to return capital in a 10-year window. And as soon as whether it's a seed round or a Series A, you're participating in that time window. There are exceptions to that. Breakthrough, Azola, there are a number of funds that do not exactly operate in that, but I would say the Main Street institutional venture fund operates in that time window. So I think just being taking a sober look at your numbers, at your unit economics, as your repeatability, your supply chain, and saying, can I genuinely imagine that if I pour more resources, put more people into this, that I can grow at a pace that I can somewhat predict? I think is the really core question to ask yourself. And I think that can sometimes be hard when you look out at the market and you say, oh my gosh, my competition is raising capital, or there are these incentives that are becoming available for climate hardware. There are things that can very easily draw attention away from that. But ultimately, the moment that you raise venture capital, that is a structural aspect of the relationship. And so I would always just ask yourself, are we really ready for this shot clock to start? And so that would be my response.
Anyone else with quick comments? Caitlin?
Yeah, maybe I'll just say sometimes it's like, and I know this because we've been looking in different parts of Africa, it's really difficult to get some of that non-dilutive funding quickly. It can be lengthy in the process. So sometimes you have to turn to VC funding at the early stage because you just need to keep the lights on. So it's almost, if you can get any other kind of funding, like if you can get debt or if you can get early offtake, great. But if you can't, then try and minimize, like just raise the bare minimum to keep going until you can get enough proof points that you think you can be able to raise different types of capital.
There are also some financial mechanisms now that are using grants as collateral, right? So if you're like, hey, we actually have this grant, it's going to come slowly, we'll be able to sort of front load that as well. Sonam, Peter, do you guys want to add anything?
Yeah, I think what Chris said, it like really hit it on the dot, right? The shot clock really starts. I would also think about how are you creating your capital stack from sort of that first raise to be able to enable you to actually get project finance later on down your journey, right? So if you raise way too much capital from venture investors very early, and again, dilute yourselves, dilute your early stage investors, those project finance investors are not going to be able to put money into you because you have one, unreasonable growth expectations from people like us, right? And then secondly, they can't see themselves as a part of that capital stack because there's no room for them, right? So thinking about that, and you know, again, I mentioned like a number of incubators and accelerators, like, you know, Candice, obviously you talk a lot about this in Climate Vine. There's Venture for Climate, Scale for Climate, Activate, a number of SOSV, right? A number of other groups that really dive deep into this. So highly encourage you to sort of go through one of these programs before you start raising venture, so that again, you can create a cap table that makes sense for your business.
And I would just say really quickly, I think it, particularly for deep tech, it depends on your TRL level. That if you are really getting to the level of maturity, you're probably moving away from venture. And then if you're trying to just get past that part of prototyping, venture, we've seen sort of could be a really productive way to get you to the point where you could be looking at other forms of finance. We've also seen that even as you might be at a slightly lower TRL, having a little bit of venture in there and then getting a large offtake agreement is enough to get you into conversations with normal debt financing or some types of facility financing. So it's a different capital stack depending on what specific sector you're going after. But I wouldn't rule out venture in general, particularly for that sort of like TRL 4 through TRL 7 space where it can help get it over the hump.
Thank you, Ayan. So a couple wrap-up comments, which is one, in terms of Climate Vine, applications are open until October 1st. The earlier you can get them in, the better. As a thank you for being here, if you put in your application, put it in all caps, please. I was at the event. You get 20% scholarship to the upcoming cohort. Want to thank each of you for joining. So Caitlin, Sonam, Peter, Chris, this was fantastic. I can't summarize everything that you said in the minute and a half that we have left, but just there's so much there, and I'll try to distill it at some point. If anyone here wants to drop how you can be reached out to, you're welcome to do that in the chat. I know I've noticed that some of you are actually connecting in the chat as well. But that's an opportunity to do it. If you as investors want to drop your LinkedIn or email or website, whatever works for you, I think is totally great. And otherwise, just thank you again for being here. And if you as a participant want to go up mute and say thank you to the investors, you're totally welcome to. But just thank you all for being here and making this really fun and very informative event in a short period of time. So thank you.
Thank you. And after
This was
climate
awesome.
coffee.
Thank you so much.
That sometimes happens where we all speak over each other, but then it's kind of fun. So thank you. We can keep doing it. All right, so you guys can keep dropping the things. I'm just going to keep it open for a minute, which might be awkward. Feel free to jump off, but just copy whatever you need to copy. Jump off when you want to jump off, and I'll close it in like a minute. But I don't know, I'm going to have a song and dance. Should I play I'm a Believer again? And we can just end with that. Yeah, it's probably a good idea.